So we will be looking at a few more examples on the New York Open reversal characteristic. So now it's important to understand the previous aspect of the day. So London Open, for example, did it induce enough liquidity that we can then actually have a reversal in New York? Now, sometimes we get a continuation in New York, say if London has induced major liquidity, so the major inducement essentially. So if we look at, of course, the illustrations in front of us, well, examples that you've been taught, you can already see we have this liquidity in Asia high. London Open induces Asia high. Then we get our continuation bearish, breaking out Asia low. And then, of course, there's fractal liquidity here in the form of this equal lows type of trendline stuff. And then, of course, we have a mitigation here to the left. Now, we're not always going to have a mitigation to the left. Sometimes what will happen is if we don't have a mitigation, we simply have our inducement of this relevant liquidity over here. And we have, of course, the perfect vector candles that then help us understand the inducement characteristics where price can then continue bullish. Now, we do have other confluences, of course, how you can enter trades like here. Of course, we will be taught that in week 3. But for now, it's just important to understand the reaction. So we have our New York Open box, you can see in gray over there, which allows for the reversal. So sometimes we get a reaction of the reversal, and then maybe London close gives us the continuation. Again, it's important to cement the daily cycle variations. Again, you will be taught that in a lot more detail, so don't worry, we are teaching you in step by step so you can just get familiar with it and start to implement it as well. Okay, so below, same thing. What do we have? Perfect equal highs over here of Asia high. Even this trend line build up. So trend line traders at this point are pretty excited because price is actually going in their direction. We even have the breakout traders here taking it from Asia high. And then, of course, what happens? London Open inducement. Now, of course, you could say the candles or the velocity of the movement here as compared to here where it's very minor depends on what's to the left. We may have more significant liquidity in the form of equal highs, whatever it be, where price then does something like this. And then price induces that, hence why our inducement now ends over here. Again, London Open inducement, perfect reaction, as you can see, also takes out the low as well as the trend line over here. Again, same characteristics. We get this fractal trend line type of liquidity, these highs, price then vectors. You can see the vector candles over here into these areas to the left. Again, we may have these mitigation areas. That this is where the smart money trap comes into place of why this, you could say POI, imbalance, whatever you want to call it, is then invalidated, and how we actually expect price to then induce this zone as we get a perfect inducement in New York. And then, of course, the reversal in the continuation aspect, taking out these highs to the left. So this is really important to understand how you get variations, but for now we'll be showing you the simple reactions of New York Open. So first example, we have gold, as you can see, and then we have it on the 26th of April over here to the bottom. So again, if we look at the liquidity aspect, we can already see, okay, Asia. So let's mark up Asia liquidity. We have perfect equal highs, equal lows even. We even have these even more perfect equal lows at, of course, Asia low. So again, everything's fractal. So you're having 2 sets of equal lows, this trend line type of stuff over here. Again, we can continuously mark it where it's very fractal, but it's important to mark relevant liquidity. We also have smart money trap over here. Again, you will be told that in more detail. But yes, of course, going forwards, what happens? We, of course, get our London and Open inducement low over here. And then, of course, we get, of course, equal lows here being induced. And then price, of course, now has a relevant inducement of liquidity to the left. London Open gives us the perfect reaction to then go bullish and start taking out, of course, these structurals, the highs, you could say, or whatever you want to call it. This is why we don't use structure in that sense, because yeah, they could say this is a break of structure of this point, etc. Then we should continue and take whatever these IFCs, and essentially that should hold when it's actually a trap. Okay, so what happens? Again, we create these new reactions. Now, it's important to understand that we may get this inducement of structure to the left, it does not mean it's entirely finished. So what that means is we may have a relevant area, relevant medium or major inducement to the left, and these are just our pullback, essentially, reactions. So what happens here is, of course, price takes out these trend lines. New York Open gives us that continuation to then take out relevant liquidity. So it allows us to take the buys. Again, we take buys in there. And then, of course, what we expect is, of course, the continuation bearish now. So again, it's like our reversal. So London Open over here, then New York, we've induced enough liquidity to the left. Price can now continue bearish, taking out all these minor levels of liquidity. And why is it minor? Because it's, of course, within the same day. It's important to understand that. So next example, again, it's gold again, of course. Again, you can see these liquidity buildups pretty easy at this point. Remember, Asia is our guideline for that. You have these trend line type of stuff over here, these lows down there. Remember the low and the high as well. Then, of course, these lows here. Now, fractally speaking, you could say that's, of course, our Asia inducement. And then that's why price allows it to push like such. But we don't use that as a reliable point for price to continue higher unless this point has induced major liquidity to the left. That's where we can get our continuation where Asia high or low is not induced. So one will be induced, just depends which one, if we're going bullish or bearish. So what happens? Price induces high. Again, this is more so in Frankfurt. London Open then allows us to take the continuation. So whether we get our inducement in Frankfurt Open or London Open, then of course depends that London Open will be a continuation and not necessarily the inducement in itself. And as we get this reaction, it's so perfect because we get this liquidity. Price induces high one last time for these confused sellers over here. Of course, buyers also trying to get in. They get induced from these perfect candles over here. Then we start taking out all of this liquidity to the left, including the low, the trend lines over here as well. Of course, we get traps too. Again, these are key. A lot of you may get familiar with this as the smart money concepts are like a more new trend as opposed to maybe trend lines, and how you can avoid taking losses with zones like such or random POIs over here. That's a really nice smart money trap because it actually gives a nice reaction. Of course, in our eyes, it's liquidity essentially. So what happens? Price now vectors really clean over here. However, again, doesn't always complete. So this is where we get the vectors. Price also creates this really nice buildup. And then we get our last vector over here, which is relevant to what's happened to the left. Then we can take our mitigations essentially in New York, of course. However, again, it's important to understand the reversal and continuation aspect. So in the beginning of New York Open, we get the reversal, taking out this relevant area of liquidity now. So we've taken out quite a bit of liquidity here. Price can now, of course, then continue bearish. As you can see, relevant liquidity is taken. Take that mitigation there. So these are really nice trades where you can hedge, but we hedge with the confluences as an addition, of course. So next example, we have, of course, Euro JPY. Now here it's pretty evident the liquidity buildup. You can see in the form of this trend line. Not the straightest trend line that I drew. I'm not good at drawing. Of course, equal lows even there, below here. Again, same fractal idea, liquidity, vector candles to induce, and hence why we get this slow choppy reaction. It's important to understand, of course, Asia is our guideline. We're just seeing the same cycle play again and again and again. Again, we have equal lows over there. What happens? Price doesn't quite induce Asia high. Now, it might be tricky to see, so I will, of course, remove that. So it doesn't quite induce Asia high. However, it does induce all of these areas of liquidity to the left in London Open, hence why we get this pullback over here. However, again, when we look to the left, we have more relevant areas of liquidity, hence why price then continues bearish, makes these reactions like such. And then what happens? It induces low to a relevant area to the left, could be a smart money trap, and it could be, of course, typical liquidity as we see. Price then shoots bullish. What does that do? Takes out Asia high as well as being equal highs, as well as the seller's liquidity that think price will then continue bearish like forever, you could say. And then what happens? We've induced enough liquidity to the left. Remember, minor inducement to the left. However, it's going to be a medium or major inducement. So we've had our medium inducement to the left over here in New York. Again, we get these perfect fractal buildups like such over here. What happens? Price continues bearish, takes out these sellers. Of course, the buyers were taken out from the inducement itself. We take these relevant areas again with confluences we have, and then price takes out the medium inducement as it's in current day price action. And that's important to understand because we will teach you again how to avoid traps like such, where you may see this zone as a POI to then take because, you know, this is our break off structure to the left, essentially speaking. So this is why it's important we don't trade structure in the way people see it. However, we use relevant market structure as you were taught in the basic master map on week 1. So then we have GJ, and as you can see, again, liquidity is the same process again and again. So get yourself familiar with marking up these liquidity levels. Trend lines, equal lows, equal highs, breakout traders even. Okay, so what we can see, we mark up the relevant areas of liquidity essentially. We're not going to mark up so far back, like these areas are not relevant in the sense we've had our reaction over here, the vectors, etc. However, it being Asia, it doesn't sustain essentially. So what happens? We induce low. You can see the perfect vector candles over here, taking out these equal lows, the trend line. So enough liquidity has been induced as well as Asia low over here. And again, when does it happen? Perfectly in London Open. We take our trade over here. Of course, we know then that price allows us to take the continuation trade. Now, why does it continuation? Because it means we have a more liquidity to the left that's relevant and it's in line and it's essentially close to where price is trading before we can continue. So what this means, we have these areas like such over here, missing out all of this area. Price instead makes these equal lows over here. Perfect vector candle over here. Price now induces high. Why does it induce high? Because of course we've got to take out relevant areas like such here, as well as the equal highs up in Asia. So New York Open, of course, we will get our inducement. Then what happens? Perfect continuation reaction. Look how clean that continuation is. So we induce high perfectly. Minor inducement, of course, your false smart money trap zones over here. Again, these are all just liquidity buildups. Sometimes look rather odd. Again, same thing here. People are channeling here, thinking it's still continuing, but that's when price is slowing down. Again, let's look at more examples. So we have, of course, GBP CHF. Now, this is a pair maybe you're not familiar with. We use it in lit because it's very clean in the lit cycle. So yeah, you may be thinking, why this pair? But honestly, you will see how clean this is, generally speaking, and how we have a lot of examples of this. Even in my beauty of the days, I cover this pair a lot as well. Again, it's for orientation to understand too. So we, of course, have our build-ups here, the highs, of course, these trend lines over here. What happens? Frankfurt Open makes this inducement perfectly. Get the perfect vector candles over here, perfect fractal highs over here. Again, inducing liquidity to the left. What does that mean? London Open mitigation essentially over here. We come lower, again, take the consecutive mitigations over here. What does this mean? Of course, we have our inducement low off the trend line liquidity here. So price has essentially induced enough liquidity at this point. Again, for our continuation aspect, price then continues bearish. However, we get, again, more build-up. So this gears us up to understand that actually price could be ready for sells. We see already perfect vector candles, and we even see at least a fractal target that's within risk to reward reliable, you could say, in that sense, that it's a very decent risk to reward if we take, say, something over here, and of course, at minimum close around here. Again, we know that this is our trap. You don't take that. So the order of things is very, very key. So once we've had that, what do we get? Our reversal in New York. Of course, inducing smart money traders over here, taking out liquidity as well. So that's it from me on the New York Open reversal characteristics. So I would say get familiar with seeing these reactions, backtest them, identify the reactions. You, of course, will get the indicator to see it easier when you're backtesting. For now, just mark it up or look at it, identify these liquidity points and the reversal characteristics. If it's not a reversal and it's a continuation, understand why. Remember, understanding the inducement aspect, which type of inducement it was, as well as the liquidity aspect of targets, essentially, will help you understand why New York can be a reversal, or it could simply be a continuation when there's, of course, liquidity to the left that needs to be taken out. Of course, I would recommend saving these, take screenshots, of course, on your own charts, so you have a good backlog of trades to look at. So thank you very much, and I hope you enjoyed that.